Good morning, everyone. Welcome to our Friday morning trading session, the end of another work week. Hang on a second here while I get you my monitor, and we'll take a look at what's been going on. Yesterday, as expected, the market was pretty much in a sideways type pattern. All right, so let's take a look here at the Eagle. It really condenses what's been going on recently, namely the market goes up, the market comes down, the market goes up, the market comes down. We're pretty much pinched between 4,600 and somewhere around the 4580 area. And that continued through the overnight. We did see a little bit of a breakout here through the upside. We're challenging the top end of this trading range now. And it remains to be seen whether or not the market can stay out of there. Got a quick little rally and signal a few minutes before the North American markets opened, which is not unusual. You see all this volume going through? That's a lot of volume pre-market. So we'll give them a few minutes here to settle in. We did get like I said, some quality signals just prior to the open. If you were watching, there was a nice little first micro-macro cross signal that developed. We got essentially a late filter entry signal. And hold on a second. Let me see if Daniel's in the room this morning. No, he's not. All right, well, I'll answer this question anyways. Daniel just wrote me a question about this particular signal right here. Almost the identical setup, actually, to what he wrote, where he's looking at a market that... All right, why are my tools not working? He's analyzing these two signals here. He's saying, okay, or he's asking, this first one is okay because the trend line, the filter, the bars, everything is still in sync, but this second one is not okay because the trend line went out of sync. Can you see that? It went out of sync here for a bar, maybe two at the most. Otherwise, it would have been a late filter entry, right? Like this one here. The late filter entry, the key components are the trend line goes out of sync and then comes back into sync, and then we produce a signal. This is a high quality signal, this guy right here. But Daniel's asking, is this signal here one to be ignored because the trend line changed color? This is one of those little finesse trades. If you're trading strictly by the book, then Daniel is correct. You should ignore this one because the trend line changed color. But what do we expect when the trend line changes color? Well, we're expecting that the market's going to try to change the trend. When the trend line simply goes out of color for a bar, I will still consider this signal like a late filter entry signal. Why is that, you ask? Well, the fact of the matter is this bar traded perhaps one tick too low, but that was enough to change the bar or the trend line color. However, it only did it for one bar. It's not like there was a full trend change going on like we see down here. You know, the trend line changes color, the bars go up, the bars come down. We produce a trend change signal, another high probability signal. This, the bars only went out of sync or the trend line, pardon me, went out of sync for 1 bar. And that was because this bar probably traded 1 tick too low. So, like I say, it's one of these little subtleties. I would not necessarily negate this, this signal right here because the trend line went out of sync for 1 bar. All right, I hope that makes sense. But if you're in doubt, you can just play it straight by the book and ignore this signal. You should be learning from this signal, or certainly from this signal. All right. So now we're working on, speaking of trend changes, we're working on a possible trend change. The Raptor actually gave us our soft edge sell signal right here. I'm going to see if I can catch that on a limit order, if they're going to let me in there with a limit. Essentially a double top here. A double top is also a double top is also a test of the extreme. It's a test of the extreme that's right on the mark, or in this case, a tick or two above. Again, this is one of these little subtleties that I was just talking about as well. If you get a market that does this, you recognize it as a test of the extreme and that you should be looking for a failure and a move lower. What if the market does this? Hits it right on the mark and fails. That's also a test of the extreme, even though it is exactly on the mark. What if the market does this? Goes a little bit higher. This is also a test of the extreme. Remember the principle of the thing. We're looking for buyers to recover the trend in all these cases. And in all these cases, the buyers fail to recover the trend. That's what makes it a test of the extreme. It's not negated just because the market comes 1 or 2 ticks above this previous high. Oh, I guess it'd probably be a good idea if I put a stop loss in play. There we go. All right, so when you're looking at these things, consider the principle, or try to consider the principle. Now, when the market gives you these double tops or slightly higher tests, it is possible still that we'll see one more retest here. So don't keep your stops overly tight. You may regret it. Late filter entry, I got late filter entry signal on the brain. Red bar buy signal, same kind of setup that we're looking at in the Falcon. You could wait for the first micro macro cross, or if you're the more anxious variety, you could sell the failure of that. And because it's a counter trend style trade, you could just go all in, all out with profit. I'm running 2 contracts there. That would not be disappointing. as the market struggles back to the hard edge. See here on the Eagle, we're going toward the hard edge. Here on the Raptor, we're heading to the hard edge also. So the Raptor stops at break even. Hopefully they don't bounce too much there. And the Hawk, I guess I should have tried to enter a little bit earlier here. The Hawk just hovering above our break-even trigger. All right, come on down. I didn't highlight this morning's gap, but where the market left off, 45.80-ish. Where is that? Oh, I guess it was closer to 45.90. So 45.90, the market falling off out of the open, so we've pretty much covered that gap. And I'm not liking all this hesitation. Come on. There we go. So the Hawk hitting the break-even trigger and just about to kiss our profit target. This could run out a little bit, but I think I'll be content with the profit if I get it. Come on. See, we're hitting some resistance. Notice the width of the bars are getting a little bit fatter. All right, so we hit that profit objective. Hooray for us. Now, the tricky part with the Raptor, trying to ride out this little swing. Here's crude oil on the Hawk, trying to produce a first micro-macro cross. Unfortunately, this bar has gone yellow, so I could either short the failure of the red bar buy signal, that's this one right here, and with crude I have no choice but to try to cover the trade tighter because I just can't afford more. Or I dial up the risk amount, the risk percentage. Or you can wait for a new first micro-macro cross, or you can wait for a 3-arrow consolidation. So you got a couple of things going on here in the crude oil market. And crude on the Falcon producing a possible trend change signal. Now, these are a little tricky because you need to take into account everything on the left side of the chart here. This market is in an uptrend. It is likely to resume the uptrend. The scalp trade I'm not so worried about because it's got a pretty tight target. This one, you definitely need to be cautious on it. So we're just producing the warning dot. We don't have the signal just yet. But ideally you would want to cover the trade above the high, but shoot, can't do it. It's out of reach. No, they're going to tag me here at break even now. So we got profit on our hawk trade, but weren't able to run out the eagle trade or the raptor trade too much further. Oh, here they come again on the hawk, now with a macro pullback signal. And here too, all these counter trend trades not giving me a warm fuzzy feeling, because again, we've got a market that's, if you look at this point, is a market in an uptrend or a downtrend? Well, that's a rhetorical question, because of course the market is in an uptrend. So all our sell signals essentially are counter trend at this point. But it is a high probability signal, so we'll see. Wouldn't be the first time DTS was smarter than I was, or am. Alright, if you're looking at crude oil, we've got, you can negate this signal. Now we're getting a green bar sell. This is actually developing very close to the swing high. But you know what? We can also buy the failure of a green bar sell. So once again, taking into account or into consideration what's on the left side of the chart here. We still have higher swing lows. In fact, here on the eagle on crude oil, we're producing a buy signal. It's our first buy signal, our trend change signal. This is going to be hard for me to cover. Okay, here, I should cancel that. There's two ways you can do this. First off, you'll notice we're against the ATR. You can set your entry order just above the ATR line, which would also be above the high of this current bar. You can use this bar as your signal bar rather than this bar with the hash mark. Why is that important? Well, all it does is it puts everything in sync on your trade. If you're going to use the ATR as a filter, then if this bar trades or closes on the high, it will flip the ATR below. You see, every time a bar closes above the ATR line, it moves it below. And likewise, every time a bar closes below the ATR line, it moves it above. Now we're also getting what we refer to as a second push entry on this chart. Namely, we allow the signal to engage, we let the market show us their current limits, and then we allow them to pull back before placing our entry above the high. So notice how the ATR stop flipped over here now. The idea is that when we do that, we get some renewed momentum coming into the market. That's the idea anyway. And we're trying to always stay on the momentum side of the market. And there's, you know, good upside momentum here. Okay, so it looks like here on the hawk trade, the market did manage to drift low enough to find our profit target. Hooray for us. But we're continuing this sideways drift. One, two, three. I could treat this as a 4-arrow consolidation here on the hawk. We are moving sideways. It is a yellow bar. I will take a 4-arrow consolidation off a yellow bar. Should we really try to short this again? Oh gosh. Maybe I'll throw a single in there. I don't want to get clobbered. I'm only showing this signal in the room. That's the signal I would pass on. It may well work out, but it's scaring me. There's been very little follow through on these bear signals that we've been getting. Right, we got the failure of the red bar buy. Sure, it trickled lower, hit our profit target. We got the macro pullback. It trickled lower, hit the profit target, but there's no real momentum higher or lower, so that bothers me. If we get filled on this hawk trade, I'll negate the profit target on the off chance that the market is actually going to break out and move lower or lower than our profit objective. I'll put the break even right down there. If we break these lows, there may be a little bit of a reaction. Oh, we did hit our profit target again. Look at that. Okay, so here we are at the lows. We're getting that reaction. I'm trying to stay out of the way of the swing. I can roll my stops in above these highs now, I think. If the market fails at this point, well, it's probably time to go. Oops, wrong button. Come on. There we go. All right, we got the break-even trigger. And let's see if we get some follow-through now. So we're stumbling around 45.90. That was a pretty popular number yesterday. Just out of curiosity, where is the Support line, oh, look at that, at 45.90, right at the median line. After that, we can look for 45.80 3/4, essentially 45.81, maybe even 45.82. And that seems like a very reasonable objective. $45.82. I'll make it $45.82. I don't want to be the last one out. Oh, don't you be retracing. Come on. Gold is sneaking higher, so that may put a little pressure on the stock indices. We had several good signals here on gold. First micro-macro cross, whoa, huge explosion there on gold prices. Nice macro pullback / 3-arrow consolidation or 4-arrow consolidation. Gold is another one of these faster moving markets, so you could take it off the third arrow. Regardless, the third arrow was a macro pullback and a very, very nice move from there. Mr. Buckaloo is asking a question here. Eric, when using the ATR trailing stop, what multiplier do you recommend? I've experimented with many. Have you ever adjusted during the day based upon volatility or the trade forecaster? All the time. All right, let's look at the ATR multiplier. I'll show you what I do to determine what it should be. So first, let's turn on the ATR stops. And I'll take a look and I'll see how well the stop seems to be fitting the market. And right now it seems to be covering it pretty well. Next, I'll take a look at some signals. So we had a buy signal back here if I was running the ATR at 2.618. Would I have been stopped out there? Well, maybe, maybe not. I certainly would have been stopped out here. If I think that's running too tight to the market, then I'll dial it back a little bit. A lot of times I'll change the multiplier value to 3 because to my eye, this seems to be following the market pretty well. It will hold me in on a little swing. It won't stop me out prematurely if I'm planning on trying to run the trade out. If I'm only trying to get to my high probability target, I'll almost always default to a swing high or low. So in this case, if I were taking this signal, well, actually, where's my multiplier? Okay, if I were to take this signal, I would probably not place my profit target right here. Or, profit target, stop loss. Rather, I would place my stop loss below the swing low. And then once the trade was progressing, if I wasn't going to take profit all in, all out, or I had a runner in play, then I would change, probably by this point here, I would change to my ATR stop and just let the market go where the market will go. But if it looks to you like it's fitting the market pretty well that day, go with it. And that's true for any of them. You know, I go to the ATR stop. I like the average true range stop strategies. So you've got your super trend. Super trend is the ATR stop on steroids. They've added a smoothing component with a moving average. The idea is that it's more responsive, but here too, you'll probably dial it back a little bit. What I tend to do as well is when I have a lot more open profit, I'll change to a more aggressive stop strategy. So whereas I may start off more conservative, running a bigger stop like the chandelier or a wider ATR or a percentage mode or something like that, when I get more open profit, I'll probably go to a really aggressive stop strategy like the parabolics or even the bar high-low. Now, you're asking, do I base it on the volatility of the trade forecaster? The trade forecaster, this handy-dandy little tool right here. No, not usually. I will sometimes base it on the volatility of the day ranger. It looks like we hit our break-even trigger and the market came back, took us up at break-even. Oh well. Sometimes I will use the volatility of the day ranger to suggest a stop and even a profit objective. So the day ranger 30 days ago we had 200, average range was 230 ticks, 10-day average 160, 5-day average 107, just over 107. What is that telling me? Well, it's telling me the market's contracting. Ranges are getting smaller. Volatility is less. You know, the market's obviously not moving as far. It's getting a little bit choppier, to be sure, but the overall ranges are less. So today we're up to 97 ticks already. Yesterday's range was 128. So if I'm looking at a profit target and the average range seems to be anywhere from 100 to 120 ticks, if I say I want to take 20% of the daily range as a profit objective, well then I'm going to run a 20-tick profit target. If I say I'm going to allow 20% of the daily range to move against me, then I'm going to run a 20-tick stop loss. Likewise, when it was 30 days ago and it was running 200 ticks, well, those values would all be larger, wouldn't they? I'd be running, if I wanted 20% of the daily range as a profit objective, I would be running a 40-tick stop loss. I probably wouldn't allow 20 ticks as a, oh, did I say stop loss or profit target? I meant profit target. I probably wouldn't run a 20-tick stop loss, but I may allow 10% of the daily range because obviously the market is making much larger moves. I may allow 10% or 15% as a stop loss. So I'd be running a 15 or 20 tick stop loss above or below the market. So the day ranger may be a slightly better gauge of market volatility. And here we are. Our crude trade still kind of chugging along. We're here stuck on the median line. We've produced several signals here on the Falcon. We got a second push on this signal. Can I cover it above the high? Oh, I can. This hard edge is a concern to me. I can see a a bounce off of there. We are getting another first micro macro cross. Can I cover it way up there? Oh, I can't. Oh, shoot. All right, I may have to punch in this way. I was going to change my profit objective. So had I gone all in, all out instead of trying to run the trade out, I would have nabbed that profit as well. That's what happens when you try to get cute with the market. All right, we'll just let those trades do their thing. Bill is asking, Eric, I just swapped out the DTS for the RTS. What was the original cloud size before the double? The original cloud size was 12. If you're just looking to run the single cloud, it would be 12 ticks. And I know, Bill, you just wrote me about a cheat sheet for the Raptor. I don't have one yet. The problem with the Raptor and the Eagle is that I haven't been able to find one chart that shows all the quality signals. But, oh, yeah, okay. Bill says, I watched the videos. There's only 4. Well, yeah, only 4. The Hawk has got 5, the Falcon essentially has 3, and the Eagle has 3. So yeah, the Raptor's got 4 main signals that you're looking for. One of them I'm waiting for right now. It's the cloud crossover signal. And here's a better example. The clouds cross. Now you need to be careful with the cloud crossover signal, because if you're looking at your chart and the clouds are twisting like a rope, you're going to get several cloud crossover signals, and you're going to see they're going to have very little follow through. So if the market is moving sideways, recognize that the market is moving sideways, and don't just blindly take the signal because Eric says it's a high probability signal and it should work out. This is a cloud crossover. This is a cloud crossover. Neither signal went very far. So you're looking at this chart and you're saying, I'm thinking trading range. I'm thinking the market's moving sideways, and you're watching your clouds, and your cloud crosses over. And when the cloud crosses over, we anticipate the market will retreat into the cloud and that the cloud will bounce it out. Okay, so there's a little retreat. Let's see, did we get a bigger one? There we go. That's a little better of a bounce into the cloud. Normally, we want to see it make a good move into the cloud. Something like this, where it moves into the cloud, maybe even encounters the hard edge, bounces out, produces a signal. The only thing this signal has going for it more than this signal is that it looks as though prices may be starting to get out of this trading range. And remember, when prices get out of a trading range, we look for the retest of the trading range, and then evidence from the buyers or the sellers, as the case may be, that the market wants to stay outside of that trading range and produce a signal. So that's kind of what we're seeing here. This signal, however, it's not 100% clear, so you do need to be cautious with where you cover your trade. I had somebody ask me the other day about this. You know, they took a signal and they said, oh, the signal failed. Not necessarily. Stephanie, when she was with Indicator Warehouse, that was always her thing. You know, if the market went up a couple ticks and then came back against her, she said the signal failed. And I said, why do you say that? And she said, well, it hit my stop. And I would say, well, why did you put your stop so tight? And she would say, well, that's because that's where your stop goes. It goes below the signal bar. And I said, who says? The stop doesn't have to go below your signal bar. The stop can go wherever you want it to go. Just remember not to risk more than you can afford. So when this signal is producing, technically it is a cloud crossover signal or your first with trend signal. You could see it one of two ways. But if it's not a cloud crossover yet, or you don't believe it could be a cloud crossover, you may expect the market to move back into the hard edge. So at that, when I'm looking at the hard edge, I automatically see this low right here, and at the very least, that's where I would place my stop. If not that one, then perhaps this one. But this one right here is looking like this is where the buyers kind of took over from the sellers. We made a higher swing high relative to this one. We're making higher swing lows. So this looks like where the buyers are really stepping up and saying, okay, we're going to give this a go. And lo and behold, the market retreats into the cloud and comes out and produces a better looking cloud crossover signal. Now you could place your stop below here near the hard edge, but once again, you don't want to leave your stop so tight that you get stopped out prematurely. So when in doubt, go a little bit further away. And well, you at least got your first profit target and probably got high enough to hit your break-even trigger. So that's one of your high probability signals with the Raptor, is the cloud crossover signal. You watch those clouds cross, you watch the market come back into the cloud, which it will inevitably do, and then the market spits it out. Another high probability signal is the soft edge sell. That's this guy right here. The soft edge sell must always, always, always be preceded by a test of the extreme. In this case, we would be looking for a retest of the high. Ideally, it would come up short and then it would fail. Then we would look for our sell signal somewhere around there. This is what I was talking about this morning. The fact that the market went a tick or two above this prior high does not negate the fact that it is a soft edge sell. How can I say that? Well, because the market took out this low. Right? The market swung, or took out this low here. It's rejecting the highs, the extreme. This one here is textbook, right? When you get it developing like that, that's what you want to see. If it breaks it by a tick or two and then the market boosts it lower, that's okay. Soft edge sell, very high probability signal, and then the market heads lower. And it's heading lower, the clouds are crossing over. What are we going to expect? We're going to expect the market to go into the cloud and for the market to bounce it back out, if in fact that trend is continuing. Let's see if I can find you a soft edge buy signal. This, well, all right, this is another one that requires a little bit of finesse. Let me show you this one here. This one's a little more textbook. Soft edge buy signal right here. I would be buying that. Why? In fact, I think I did buy that. Is this yesterday? Yeah, I did buy that. Oops, wrong button. Why would I buy that? Because it's retested the low and it's failed and it's producing a buy signal. Now, normally our target for the soft edge buy is the hard edge. However, excuse me, however, when the market produces this close to the hard edge, it will very often explode through the hard edge, and that's what happened here. So the market went up, and again, at least hit your high probability target and your break even. So there's a soft edge buy. After that, we're looking for our double pullback signals and hard edge bounces, and I don't see a real good double pullback. Well, I guess this will illustrate the notion, but normally the pullbacks are much deeper. Usually these pullbacks get at least into the first hard edge, and then the market tries to expel the market, or the band tries to push the market higher the first time. It fails, it comes back, and then it comes out a second time. That will produce a buy signal or a sell signal, as the case may be. Now, same thing, you got to take context into account. Here you could see several double pullbacks, and you could try to, short that one, but it didn't go very far. Here's another series of double pullbacks. And this one took you a little bit further. You got some heat on the trade. And again, all these, they didn't necessarily fail if you had your stop in the right spot. Right? Where would you put your stop off of that double pullback? Well, automatically, I know you're thinking, well, I'll put my stop just above those highs. But you'll see that's not far. Oh, maybe that was far enough. No, it wasn't far enough. So always try to keep your stops as structured. If you're looking for price structure, the best stop is up here. I know you're looking at that and saying, oh, well, I can't afford that. Well, then dial down your risk exposure. Take one contract instead of 2 or 3. But your stop is not a loss until it gets hit. Or you can split the difference. You can go for the crest here in the band and say, okay, I'll risk it that far. That would have been enough to hold you in, at least long enough to hit your profit objective. This would have been very uncomfortable. But the point I'm trying to make is take the context into account. If you see the market going sideways and no follow through, don't just blindly take signals because they happen to move into the hard edge twice and the market comes out and produces a signal. Let's see, what else was there? The double pullback, the trend change, the cloud crossover, and the soft edge buy and sell. I think those are your 4 high probability signals that you're going to be on the lookout for. Oops. And the Raptor forum is also a great place to hang out. Here, I can't multitask, sorry. The Raptor forum, the Raptor Facebook forum, good place to hang out. A lot of good ideas being shared there by other Raptor owners. Little tweaks and things that they put on depending on the market that they're trading. So some very good resources for you there. We're slipping lower. Looks like we hit our target on our Hawk trade. Hooray. We're doing pretty good on the Hawk this morning, I think. Yeah, that's not bad. Considering most of those trades were just with singles. And we're almost to our profit target here on the Falcon. Keith says I don't have a Facebook account. I don't blame you. I wouldn't have one either. But this one is a very safe forum. You're not going to have your email end up on somebody's email list. It really was the best way for the Raptor community to get together and share ideas. There is also a DTS forum, a Facebook forum for DTS owners. Okay, come on. The market seemingly bearish today. However, I suspect we may see another sideways market. Yeah, I think they're going to tap me here on the break even, which would be unfortunate. See, it was my delayed entry. Had I entered on the hash mark, I got to this signal a little bit late. This is a late filter entry signal. It actually produced right here. And you can see it would have had no trouble finding your profit objective. Still looking for the market to come down here to the primary support. I just don't feel like leaving my stop any further back. If they're going to reject the market early, if they're going to reject this support early, go ahead, take me out of break even. Oh, a little bit like watching the paint dry. Well, we're kind of in between trades here at the moment. And not much we can do about that. Yeah, too bad. Tap me on break even, and if we are in a sideways range, well, then we're probably going to see the market try to get up here and get back toward the top end of this trading range. If so, the Raptor should produce a soft edge buy signal, but first we need that retest of the low. May only be for a bar or two, so we need to be on the lookout for that. Thanks, Bill. You have a nice weekend too. Will they try to head lower from here again? Will the market bounce and hit the trend line and reject the trend line and go higher? Stay tuned. I'm still looking here. I haven't gone anywhere, but there's really nothing going on here. And we don't want to just hop into a trade for any old reason. not getting anything. I almost thought we were going to get another move lower here. I've been watching these bars on the hawk, thinking, oh, we're almost going to get a macro pullback. Yeah, Jim says, are you breathing, Eric? Yeah, sorry, I don't know if you guys can hear that. Yeah, nothing going on here this morning, Jim. It looks like we may have seen the move of the day, and now we're looking at the buyers perhaps trying to rally the market back. Come on. All right, here we go. Maybe getting a red bar buy, or pardon me, a green bar sell that I can buy the failure. I can buy a move higher. Okay, there's the yellow bars. There's the green bar. Okay, now give me that sell signal. Come on. Come on down. Give me that sell signal. Oh my gosh. This is almost too painful. Come on down. I'm waiting. Well, I'll set the order up. I won't engage it yet. This is what it's going to look like. If we get the green bar sell signal, we can look to fade it and buy a breakout higher. In fact, we can do one of those. Oh my gosh, folks. I'm going to fall asleep here in a moment. I don't think I've seen the market this quiet for a long time. In fact, I think we're going to close up the trading room. What we're looking for here is a rejection of the lows. We're getting signals across the board now. Here is a red bar buy signal coming in the eagle. I would allow this current bar to complete, which will once again flip the ATR. You do need to cover the trade below the lows. Here in the Falcon, we're working on a possible trend change signal. And here in the Raptor, well, the Raptor is the only one that's still kind of bearish, really. If the Raptor comes out of here, this would be a cloud crossover, and we may get a signal to the short side. However, I suspect we're going to see the market come down here, fail, and produce a buy signal, just based on what we're seeing on the other markets. Either that, or we're going to enter a very tight sideways trading range, which will just be too difficult and far too annoying to try to trade. Still working on this green bar sell. So now looks like the sell parameters are going to set up something like that. Okay. I think we're going to button up the room, call it a week, and I will see you guys next week on Monday. Have a nice weekend. I'm certainly looking forward to mine. We'll talk to you soon. Bye for now.